You may have the credit score, income, and employment history needed to purchase a home, but are struggling to come up with the money to cover your down payment and additional costs that come along with it. Well, you're not alone. In this video, I'm going to talk about the 3 components that make up the funds needed for a home purchase, and most importantly, the tools I've used to get my clients into homes for as little as $1,000. So typically, you need a down payment, closing costs, plus prepaids and escrows to purchase a home. I'm going to talk about how this down payment actually works and where that money can come from. So let's talk about what a down payment is. The down payment is the money that you're going to come out of pocket to use toward the purchase on the home. Let's assume you're buying a home for $400,000 using an FHA mortgage. FHA mortgages allow you to put as little as 3.5% down on a property. So in this example, if you're buying a $400,000 home, putting down 3.5%, that would mean you need $14,000 as your down payment. This down payment, although it's money you need to come up with at the time of closing, is not a true cost because it becomes equity in that property. But on top of your down payment, you will have true costs. And you might have heard the term closing costs. If you want to learn more about what closing costs are and what they're comprised of, I encourage you to watch my video specifically on this topic where I'll walk you through all of those costs, where they come from, and how much you should expect to need. In this video, I'm going to give you a brief overview of what closing costs are so that you have a better understanding of the amount of money you would need to make a purchase of a home, for example, at $400,000. So your closing costs are going to be charges that come from the lender. It can be things like processing fee and underwriting fee. It's going to be title charges. The title company is going to be the one actually handling the closing for you on your purchase. So title companies are going to charge for their services. They're going to charge a closing fee. You're going to have title insurance when you get the property. There's going to be a lien and title search done. There will be notary fees. On top of that, if you're buying in Florida, you're going to have government charges such as documentary stamps and recording fees to record a copy of everything you're signing, like your mortgage, in public record. On top of your closing costs, you're also going to have prepaid items and escrow reserves. Prepaid items are things that you have to pay in advance. And by advance, I mean at the time of closing before you move into the home. So a prepaid item is something like your homeowner's insurance premium. You need to pay your first year's homeowner's insurance premium at the time of closing so that you have insurance when you move into the property. This is going to be required anytime you're obtaining a mortgage on a home. Now, your escrow reserves are an account that holds money for taxes and homeowner's insurance, and you'll continue to put money in that every month as part of your mortgage payment, assuming you're not waiving escrow, meaning that you're not going to be responsible to pay your own taxes and your own insurance once per year whenever those are due. You can waive escrow, with us at least, anytime you're using a conventional mortgage with at least 3% down or a VA mortgage, assuming you're eligible, with no money down. If you're getting an FHA mortgage, you're always going to be required to escrow. So setting up that escrow account is going to require that you put 3 months of homeowner's insurance on top of the prepaid insurance and 4 months of property taxes into that account at the time of closing. Now, the buyer, you, is required to cover that down payment. But how can we get that down payment, in this case of $14,000, down to just $0? Well, the first tool that I use in order to make this possible is a 100% FHA financing program that will cover that 3.5% down payment that's typically required when you get an FHA mortgage. And the way this works is you're going to have a first mortgage for 96.5% of the purchase price, which is what a regular FHA mortgage would cover. And you're going to have a second mortgage for the 3.5% down payment that would usually come from you. Rather than that money coming from you, it's now being financed in the form of a second mortgage. So when you take the 96.5% plus the 3.5%, it equals 100% of the sale price. So the $14,000 down payment has now been covered, meaning that you're responsible for $0 of the down payment on the home. So that's tool number one, your down payment is covered. Now let's talk about where the money for the closing costs, prepaids, and escrows can come from. How can we get these covered so that you're only responsible for $1,000 of the purchase of a $400,000 property? So the second tool I use is a seller credit. And this is the most common way to cover the costs of those items. On an FHA mortgage, you can receive up to 6% of the sale price as a seller credit, as long as it doesn't exceed your closing costs, prepaids, and escrows. So since most homes in today's market sell for 3% below the list price, rather than offering less for the home, you're going to ask for a 3% seller credit. And like we just said, you're allowed up to 6%. So we know 3% fits within what you're allowed to receive, assuming in this case, you're receiving an FHA mortgage on the property. So on a $400,000 home in Florida, you're gonna have approximately $8,000 in closing costs, $3,000 in prepaid items, and $2,000 in escrows. This totals $13,000. So this means that if you get a seller credit of 3% on a $400,000 property, which would be $12,000, that credit will nearly cover all of your closing costs, leaving just $1,000 that you need to come up with. Now, you may be able to negotiate a larger seller credit and potentially get into home with zero money out of pocket. However, a 3% seller credit is very, very realistic in today's market. So, if you're ready to buy a home and the cash to close is what's been holding you back, use these tools to make homeownership a reality. If you enjoyed this video and have questions or comments about your specific scenario, please leave those below as I respond to 100% of the comments made on my videos. And of course, follow me for more videos just like this one.